Hey everyone, this is Corey with Sense Investment Management. This is another monthly market update. And we're closing out 2022 here in December. I hope everyone had a wonderful Thanksgiving and is enjoying the holiday season. We're in a little bit of a midst of a Santa Claus rally. Not the truest form of it when you look at history, but we have rallied off the bottom that we saw in September. Historically speaking, the market likes to rally sometime between October and November until the end of the year. And then into the first quarter a little bit as bonus checks start coming in and people typically tend to put more money into the market this time of year. The market is still down over 10% year to date in 2022, and it looks highly likely that we will finish the year negative. And that's, of course, typical in the sense that once every 4 to 5 years, we typically have a down year in the market. So we're not seeing anything this year that we haven't seen many times before in the past. I do think if we put it in perspective or context, the market really started to peak in November of 2021. And so we're about a year into this quote unquote bear market and this pullback that we're having. To put that into context, if you look at the Great Recession, if you stayed fully invested during the Great Recession and you reinvested your dividends from peak to trough and then back to peak, it took you about 40 months to recoup your money if you just kept buying into the market and kept reinvesting those dividends. That then propelled you into a 13-year bull market where you got an average annual rate of return of 17% per year. So the moral of the story is don't try and time the market. We're already a year into it. And an analogy that I can certainly relate to is when I go to start working out, and if I don't feel like working out, but I at least get on the elliptical or the bike or whatever, and I start working out, and I get, halfway into a workout, I'm usually not like, that's enough. I'm going to hop out now. Normally I power through and I finish that workout and I'm thankful that I did at the end. Well, that's kind of where we are in this market cycle. We're already a year into this market pullback. So I'm not saying that the market is going to recover in the next year. It could take 12 months. It could take 2 years. But at this point, we're already in it. We're already working out. So why would we jump off the ship now? So we're going to get all types of forecasts for what the market's going to do in 2023 coming up in the next, call it 4 to 8 weeks. And I would encourage you to tune those out because forecasters, as our newsletter talks about this month, are consistently wrong. They historically don't even come remotely close to predicting what the stock market's going to do. And that certainly is the case for this year in 2022. The other part that I really would love for you to look at is an attachment that we have this month that talks about just what we can control versus what we can't control in our financial plan. And then lastly, had a great conversation with a couple clients recently about teaching them of just what is already priced into the stock market. So the stock market is forward looking. It's meaning that typically it's going to move 6, 9, 12 months before potential market events actually happen. And so it oftentimes can overshoot on the downside or overshoot on the upside based on how pessimistic or optimistic they think the next 6 to 12 months are going to be. So when you think about where the market's trading right now, a lot of the news of a potential recession next year or interest rates hikes are already priced into the market. That's why we've had the pullback that we have. When we get some type of relief rally in the market, it's usually because maybe interest rates aren't going to have to go as high as people feared, or maybe earnings aren't going to come down as much next year into a recession. On the flip side, if the market pulls back further, it could be because people are afraid that interest rates are going to have to go up more, or that a recession could be deeper or worse than what the market is currently pricing in. So that gives you a little bit of context into some of the trading and sentiment that can go into the market. I'm going to wrap up again just with a big thank you We've had a great year this year at Sims Investment Management. Even though the market has been down, we have continued to grow, improve our service offerings for clients, and we have a lot of great things in store for service improvements and potential some new employees for 2023. We wouldn't be able to do that without our wonderful clients. And so just thank you so much. I hope you have a blessed end of 2022 and a wonderful start to 2023. And we'll talk to you in the new year. Thanks.